Rob, going into this report, the big question was whether or not this number was going to be strong enough for the Fed to think about tapering, taking that next step that we've been longing for, or waiting for, I should say, for quite some time. What do you think? 559,000 jobs added in the month of May. Is that strong enough?
It's certainly good news, but no, it's probably not strong enough. And especially when we take a look at the market action today, with secular growers doing much better, with interest rates coming down, it seems to imply the market also believes that the Fed doesn't have enough ammunition to really start talking about tapering just yet here at the June meeting. Now, the next key will be next week's inflation report. But yeah, for now, it's just not quite enough, not enough fast enough, not enough people back to work fast enough just yet.
Rob, I want to get your take on some of the sectors where you're seeing opportunities right now. We had a great week for energy, financials also in there, but we also saw tech bouncing back, semiconductors looking kind of like they're perking up, showing some signs of life. Just wondering what you're interested in right now.
Yeah, so for us, we really think about this across two horizons. Horizon one is this: as we get to reopening the economy, we really think the cyclical sectors continue to perform well. Industrials, materials, energy, and financials are really in that mix. But this is that recovery story of the economy getting back to whatever our new normal is. As we look into Horizon 2 and beyond, we certainly see opportunities in the secular growers like tech and semiconductors, because we think a lot of the learned behaviors during the pandemic, much as we're doing now with working from home, will probably persist and continue to provide growth, continue to be a growth engine for those secular growers in the economy.
Rob, what about the action we saw this week in the meme stocks? I'm just pulling up AMC here on my phone. It's off just around 7.5% today, but the action over the last couple of weeks has just been extraordinary. What should investors be thinking about, or what should they be doing when it comes to these meme stocks?
I think we need to dig in and do our homework and our due diligence. With any of these stocks, it's a question of what are really the prospects going forward. We look at this much more from a sector level, and we think there are opportunities in these recovery sectors as business restarts. But we do have a question in our mind as to what will behaviors really be and what we're calling this steady state once we're fully reopened and beyond the pandemic. Will consumers continue to go out as much as they were, or will stay at home, entertainment at home, exercise at home become key features of the new economy? And that starts to call into question some of the growth trajectory for these classic recovery sectors. So it's something we're not quite clear where things end up, but we have some concerns that the things we were doing in 2019 may not be the things we choose to do in 2022.
Well, just extending the conversation there beyond the U.S. borders, I'm wondering if you're seeing any action that you like abroad. It could be in China, although we've seen authorities there trying to rein in excess liquidity, some of their stocks having problems with antitrust, but also in Europe, which has been slower to reopen. Could it be that they're on a delay somehow? Where are you seeing opportunities abroad?
We're not quite there yet, but we're starting to wonder. From a macroeconomic perspective, there is a positive story coming out of reopening in Europe. Europe has been stuck in recession for much longer than we have. When we look at first quarter economic data, they're clearly in recession. When we look at our nowcast, which is a composite of indicators across that economy, we're seeing that in general, these data are trending more positively and above their longer term median. So that tells us that their economy is getting back to work and back to normal as they reopen. There's still a long way to go. They're just starting their recovery, but we think there is maybe something to watch for here in Europe. Our concern, and our primary concern, is overall economic growth probably doesn't look that great because they continue to be plagued by demographic problems. They have an aging and slow-growing population. So the upside is probably not quite as much in Europe as we get here in the U.S. I think to your point about emerging markets, go ahead.
No, go ahead.
To your point about emerging markets in China, I think we're a little more cautious there just because they're past their initial recovery phase in this economic cycle. They're really into that expansion phase. and we really don't have enough vaccinations yet for them to be fully reopened. And we've seen that happen in fits and starts as infection rates have moved a little higher and the economies have been forced to slow their reopening path. And so we're still a little cautious. The long-term prospects are certainly quite interesting in the emerging world in China, but the near term is leaving us with some questions in our mind.